Hi, welcome back to another episode of The Digital Wallet. In this video, we're dedicated to bringing you the latest, most relevant news and analysis in the crypto world. Today, we're going to be taking a deep dive into the charts and technical analysis to give you our most honest and transparent opinion on where the market is headed next. Before we begin, please hit that like button for the YouTube algorithm so more people can see our videos. So sit back, relax, and let's dive right in. You don't want to miss this. Alright, so today we're taking a look at the monthly candles on TradingView. As you know, it's always important to consider the bigger picture when it comes to crypto, especially when we're getting close to a monthly close. And let me tell you, this month has been quite a roller coaster. Unfortunately, some analysts are still holding on to the idea of a $10,000 Bitcoin. To put that into perspective, that would be a 58% drop from current prices. I am not saying it's impossible, but it is very unlikely indeed. Remember when we were back at $69,000? People thought that Bitcoin could only go up. The same applies to bear markets. When traders become used to it, keep waiting for lower prices, it becomes their new reality and think that the market will continue to fall and fall. The FTX drama was a low point for the market and was definitely the last domino to fall during this bear market. It was painful to watch and experience, but it's important to remember that this type of thing is normal during bear markets. Right away, investors started blaming other exchanges and looking for more bad actors in the industry, but there was no one to be found. Now, moving on. There are so many indicators, signs, and price action suggesting that the bear market is over, and that the bigger uptrend can continue. The only thing that could possibly break Bitcoin down to 15.5K would be an even more aggressive Federal Reserve. The good thing is, Fed Chairman Jerome Powell has already shown signs of slowing the pace of interest rate hikes, and as of right now 99% of the markets have priced in a 25 basis point hike this month. If Powell were to change his mind and hike the rates, for example 50 basis points, that indeed could be a catalyst for lower prices, but very unlikely that Bitcoin will ever go below 15.5K again. One of the early signals I quickly noticed and made me go all in at 16.5K was the RSI divergence on the weekly charts. Remember that the bigger timeframes hold more weight, especially the weekly and monthly timeframes. The RSI was showing a lower high, while the price was clearly showing a lower low when you compared the bottom on June and the bottom on December. This clearly shows a divergence where the price is going lower but the RSI is heading higher. This showed an early signal that the bears were losing steam, and combined that with the yearly close, a more dovish Jerome Powell, a 77% drop on Bitcoin, and candlesticks holding the 16.5K level for a whole month, and you get the perfect recipe for a bottom. All this together made me jump in right away at 16.5K, and oh boy was that a beautiful entry point. Not only that, but as soon as Bitcoin broke through the 18.5K level in January 12th with big bullish momentum candles, which was a previous resistance level, got completely obliterated. This type of price action definitely suggests buying pressure. Combine that with billions of dollars worth of short positions getting liquidated, and you get an even more bullish Bitcoin. If we go back in time to see the previous monthly closes, we can see that Bitcoin bottomed in January 2015. Next cycle Bitcoin bottomed in January 2019, and finally this current cycle Bitcoin bottomed in January 2023. This not only suggests the cyclical nature of Bitcoin and the nature of the 4-year cycle that has been following since its inception, but it also suggested that the market was waiting for a time-based capitulation, not a percentage-based capitulation. The market tends to bottom 12 months after the market cycle peak, and it tends to peak 12 months after the halving. The halving is when the Bitcoin reward for miners gets cut in half. Cut the supply in half and keep the same demand or increase it, and you get a price appreciation for sure. It is very impressive indeed how exact, easy to read, and predict it becomes when all this information is presented to you and you understand the information correctly. Understanding the information correctly is crucial. The charts are speaking, but you have to be able to process, digest, and utilize the information that the charts are throwing at you every single day. Combine all that together and you will be ready to be on your own. Let us know what you think about our price analysis. As we previously mentioned, there is a very high possibility of Bitcoin having already bottomed. If Bitcoin were to drop back down to 15.5K, it would form a double bottom pattern. This is a possibility, but we will keep you updated. We want to listen to your opinion. Please don't forget to subscribe if you liked our content and leave a comment for the YouTube algorithm. Thank you so much for watching.